Everyone in the world is saying Bitcoin is going to go to 200,000, 500,000, $1 million, and we are seeing record paces of large institutions pulling Bitcoin off of the exchanges. The over-the-counter exchange and the centralized exchanges are having the lowest amount of Bitcoin on record that they've ever had, and this is going to be inducive of a Bitcoin price supply shock. Now, because of that, I want to talk about $200,000. Is Bitcoin going to be able to get there here in 2025? What is the analysis? What am I looking at? And are these other price targets actually feasible? We're seeing new countries, we're seeing new companies, sovereign wealth nations, and even maybe pensions starting to buy up Bitcoin in record numbers, all off the backs of not only what the United States government is doing with their whole strategic Bitcoin reserve, strategic asset reserve, but also with the likes of Michael Saylor adding Bitcoin to their balance sheet at rapid paces. This is increasing Bitcoin on the debt markets. With the introduction of ETFs, it's allowing institutional inflows, it's allowing options, it's allowing a form of leverage we've never seen in Bitcoin before. That is going to change the cycle, and I want to talk about $200,000. Is it realistic? What should you be looking for? And how can you navigate this cycle to the best of your abilities in order to make the best of your Bitcoin today? The 2017 Bitcoin bull run and crypto bull run was fueled mostly by retail investors. 2013, 2017, these cycles were when Bitcoin was really getting started and crypto was really getting started. We had things like Ethereum pop up, and that was mostly retail focused hype. Major institutions weren't really paying attention, or they were paying attention, but weren't really allowed to buy these assets at the time. We saw a change in that in 2021 when that cycle was really hyped by a lot of venture capital, a lot of hedge funds, a lot of people who could operate in the gray, and again, a lot of retail expectations and speculation on where these assets were going. That kind of debt cycle of venture capital and infinite money glitch led us into the 2022 bear market. And what we're seeing in this cycle is a little bit different. Again, it seems like each cycle is changing cycle over cycle. And this cycle can be mostly led by institutional investment with large ETFs, again, retail speculation, but that is off of the back of large government, large corporation, large institution, and large nation investments in Bitcoin as well. To summarize how much governments are buying Bitcoin, we can actually see that almost 2.5% of all Bitcoin are being held by governments. Looking at this chart on CoinGecko, the United States holds about 200,000 Bitcoin, and we have legislation to maybe even increase it. El Salvador is a big player. China, the UK, Germany, all of these large countries, especially those that have a more available electricity for mining, are rapidly accumulating Bitcoin in a state that we've never seen before. 2017 didn't have this, 2013 didn't have this, and these governments having this much Bitcoin is actually more coinciding with larger players, retail investors back in the day who maybe don't hold as much Bitcoin now, whether those assets were seized or whether they've changed or whether mining has changed hands from individuals to governments. And it's not just governments. Retail investors, including myself, and larger institutions and pension funds who are allowed to buy ETFs, regulated securities, regulated assets, are buying the Bitcoin ETFs at rapid paces. To put this in context, the Bitcoin ETFs now have hundreds of billions of American dollars inside of those assets, with BlackRock's being at 75 plus billion and Fidelity being right behind at about 20 billion assets under management. So these Bitcoin ETFs are changing the way that investors are buying Bitcoin and getting involved in crypto, and that doesn't even involve the options where leverage can be found or margin where leverage can be found in these assets as well. Michael Saylor and what they're doing at MicroStrategy has really opened the door for this. We're seeing other individuals follow suit on this by opening companies that are specific to adding Bitcoin to the balance sheet, with most recently GameStop adding over 4,000 Bitcoin to its balance sheet. And so not only are you able to get leverage on crypto assets in the stock market, but this is bleeding through the entire institution of how Bitcoin and how crypto is being used in the American financial system in a way that we have never seen. There has never been a cycle like this where as many companies and as many governments are having Bitcoin on their balance sheet as they are today. Naturally, what I think happens is we evolve this Bitcoin thing into an altcoin thing, and we start getting XRP, ADA, Solana ETFs, and people start adding those to their balance sheet in record numbers as well. It seems like every new technology, every new asset is getting accumulated and adopted much faster than the last, cryptocurrency being the one that is being adopted currently the fastest. Now, these narratives are important. They're very important to pay attention to as as a crypto Bitcoin holder, whatever you want to call yourself. But how did they lead into a 200,000, a 500,000, $1 million Bitcoin here in 2025? And do they make it possible? Do they open this window for this asset to grow that much and collect that many $1 trillion of inflows? And are these top hedge fund managers, ETF managers that are on CNBC talking about these Bitcoin price predictions going to be proved correct? One place we can look for this is the Bitcoin outflows of exchanges and how Bitcoin's being accumulated at a rapid pace, leading to what could be a supply shock. I don't know if you were paying attention to GameStop and the AMC thing and how that supply short squeeze really caused people to have to buy. We might be seeing the same thing with Bitcoin, where it's not a short squeeze, but it is an exchange squeeze where people are going to be buying Bitcoin, right? They're just now getting into the Bitcoin system. They're just now adopting Bitcoin at this kind of medium stage that we're in with this asset, 12 years, 13 years in. And there's just not enough on the exchanges for everyone to buy some, right? If every millionaire bought a Bitcoin, only 21 million Bitcoin exists. So there's going to be this theme of supply diminishing on exchange and price increasing because of it. We can see that the Bitcoin on exchanges is down to about 2.5 million Bitcoin on exchange, much lower than where it was last year in 2024 at about 3 million on exchanges. So it seems like every bull run we get, the Bitcoin on exchanges is diminishing, and that Bitcoin never really comes back to the exchange. And so we're seeing probably larger people buy and hold, and they're going to make this a 20, 30, 40, 100-year play, and we're not going to have that Bitcoin available as liquidity. This kind of way that Bitcoin works of being non-inflationary and having a supply shock and having a Bitcoin standard is definitely going to cause price to go upwards. The big question is it 100,000? Is it 200,000? Is it 500,000? Or is it a million? The short answer is probably all those targets will be hit. The more interesting answer is, are they going to be hit this year, or are they going to be hit in a decade, or in 20 years, or in 30 years? I think we need to look at the charts in order to understand what's happening today and what we can expect for 2025. Also, before we jump into the charts, jump too far into this thing, in the description, Crypto 100x Blueprint. It's how I trade and invest in crypto. If you like charts, if you like playing and swing trading a little bit on the cycles, doesn't have to be a lot. That might provide you a ton of value absolutely free. It's basically everything about how I've learned crypto, just giving it away in a new version in my newsletter. So now that you know the why of Bitcoin, the why of what this asset's doing, the why of how people are accumulating, the why of how the supply is going to get shocked, now you need to know the timing. You need to know the chart. You need to know what to look at. And so I want to show you here two big things. One, what has Bitcoin done cycle over cycle? And then two, what is the total crypto market cap doing cycle over cycle? So you can have an idea of how these two combine in context to show us where Bitcoin can go here in 2025. And I think you can do some other things with the M2 money supply and how that tops out before, or how Bitcoin tops out before the M2 money supply, and we're seeing that go up. But we might save that for another video, okay? The big thing I want to show you, though, is on a monthly chart here, what has Bitcoin done cycle over cycle with a trend-based Fibonacci extension? The way that this works, you can basically go to 2017, what happened in this cycle and how did that lead to 2021? You can see when we do a trend-based Fibonacci extension on the 2017 and 2021 cycle, Bitcoin comes up here to around the midpoint between 2.618 and 3.618. Well, what happened in the 2017 cycle? In the 2017 cycle, let's say we take 2013 and we kind of bring this out, Bitcoin went through all extensions. I mean, this is to be expected. It's pretty impossible to have like a trend-based Fibonacci extension on something like this that is just so new, right? First cycle, it blew the Fibonacci out of the water. There's really no competition and no comparison because Bitcoin just it went up so much so fast. So 2017, Bitcoin went through the extension. 2021, Bitcoin went between the 2.5 to 3.5. Well, now what could kind of happen here in 2025 if we do the same exercise? When we zoom this in, you can see what Bitcoin's doing here today, and Bitcoin is struggling to even get above the 1.618. So my logical explanation of what Bitcoin's doing is it's slowly working its way down the Fibonacci band as this asset becomes larger and larger. As the asset becomes larger and larger, you're going to need more money to move it up the Fibonacci bands, to move it in price, to move it in market cap. And so in 2021, Bitcoin got all the way up here, right? It would get to about $225,000 based on this metric. But I don't think that's going to be as possible. I think at the top end, Bitcoin's going to get here to the 2.618 Fibonacci at about $185,000. But a more realistic expectation is what Bitcoin did last cycle, and it went to about the halfway point, around $150,000. Many people watching this video might think I'm crazy. They might think, well, no, that's not going to happen. Bitcoin's going to go much higher. It's such a good asset. It's going to go so much higher like it did last cycle. We're going to get a parabolic run. And I think a lot of people are forgetting that Bitcoin has done incredibly well over the last couple years, or over the last like 2 or 3 years in this bull market that Bitcoin has been in. It has made phenomenal gains, and it's really on par. In its first cycle, it went up about 20,000%. Okay, that's pretty unrealistic. In its second cycle, it went up around 6,000%. In our 2021 cycle, it went up 1,000%. And so you can see how we are diminishing the percentages every single time. And today, by today's cycle metric, we're up about 500%. And so what we saw in 2021 and what we're seeing today is probably a little bit more realistic of a price expectation, in that Bitcoin, if it comes all the way up to the 2.618, it would do another 1,000% return. I think last cycle was a more realistic expectation of what we could see in Bitcoin cycle over cycle longer term. And because we had those hedge funds, because we had venture capital, because we had a large retail population, it seemed a little more realistic. And so this cycle that we're currently in, another 1,000% return seems to make sense as all of these larger governments and pensions and funds start to add to the Bitcoin themselves. Now, do I really think 1,000% is where we're going to go? I think a more realistic expectation would be a little bit of a diminishing return from 2021 to today, maybe around an 800% return for the total cycle. There's one more way that we can do this, and instead of a trend-based Fibonacci extension, we can use a regular Fibonacci retracement and go from cycle high to cycle bottom each cycle. And you can see here in 2017, it really blasted through. From 2013 to 2017, it blasted through the Fibonacci extension, right? In 2021, from 2017 to 2021, we got all the way up here to around the 3.618 Fibonacci extension when you do it this way, okay? And so we went from going through to now to 3.618. Well, what are we doing today if we take the 2021 high to the 2022 low? Where is Bitcoin here today? We can see that we are currently bouncing right up against this 1.618 line, and how if we were to go all the way up to the 2.618 line, we'd be right at about $155,000, which seems realistic given last cycle we went up to the 3.618 line at about, at 68,000, 69,000, wherever it was. Today, if we went up to the 3.618, we'd be at $210,000. And so again, I think another very realistic expectation is to put Bitcoin here at about the 2.618 when you do the Fibonacci this way, which would put price right around $150,000 to $160,000. Now, if we get that peak FOMO hype like we typically would do in the later stages of the year, I wouldn't be surprised to see Bitcoin get up here between the midway point and have a couple of weeks maybe, where it's pushing in between the 2 and the 3.618 line. That could put Bitcoin right around $170,000, $180,000. But I would be very shocked to see Bitcoin get back to the 3.618 line, since that is where it got last cycle. And typically we're seeing Bitcoin diminish cycle over cycle. We can run this same exercise on the total crypto market cap. And let's take this 2017 cycle. Let's take the top of it and do that reverse Fibonacci that we just did. And you can see how in 2021, we got all the way up to the four Fibonacci level at around, a crypto price of around $2 to $3 trillion in total crypto market cap. Okay. That is our baseline. Well, this cycle, we are not that high. We are not getting that same kind of leverage. And it's very important to note how this cycle is diminishing a little bit. And so the majority of this total crypto market cap is made up of Bitcoin. It's made of what Bitcoin's doing. And you can see today we are struggling to get even through the one line at 3 trillion, where our previous cycle high was for that total crypto market cap. To put this in context, back here is the high point. We are just barely above that 2021 high point. And this $3 trillion line is really becoming a big area of convergence where Bitcoin has been fumbling around. And this cycle, we need to see it continue to push through it, okay? When I put that into perspective, it makes it seem like a good target for just Bitcoin to run up again would be right here around the $4.5 trillion level if Bitcoin were to continue and dominance in altcoins really didn't catch on. This 1.618 at around $4.5 trillion seems like a great spot for the total crypto market cap to get. I think that that would probably coincide with about our $135,000, $145,000, $155,000 Bitcoin. And then as that happens, we will rotate into altcoins, or the majority of people will, and that can push the rest of the crypto market cap up here somewhere between $5 and $7 trillion. And so not only are we seeing that Bitcoin this cycle probably doesn't get over $200,000, but the total crypto market cap is going to have a spot around 4.5 to 5 trillion, where Bitcoin is really going to have a good spot to land. If you want Bitcoin to go to $200,000 or higher, my honest opinion is it most likely does not hit $200,000 for the given reasons I have. And while the narrative is there, the narrative has the ability to push Bitcoin much, much higher than it currently is. I think you should be targeting anywhere from $135,000, $140,000 to about $180,000 as the pinnacle time when you sell your Bitcoin, if you are into kind of swing trading the cycles like I am. If you're a long-term holder, a decade, 2-decade long holder, this is just another little bump in the road, a little pump and dump, and you probably shouldn't be buying Bitcoin at these levels because it's going to get inflated, it's going to have to come down, et cetera. We've seen the cycles happen over time. Anyone who's telling you about $250,000 Bitcoin, $500,000 Bitcoin, $1 million Bitcoin this cycle in 2025, I think it's too big of a jump. I think it's too big of a gap, and I don't really necessarily think it's a good target for you to take as a successful, intelligent investor. That's my take on the Bitcoin cycle. I think these are great targets to be looking at for a lot of good reasons. And while institutions, governments, sovereign wealth nations are buying Bitcoin, the fact of the matter is that Bitcoin is such a big asset, it's going to take a massive amount of purchasing power to get it to that next $250,000, $500,000, $1 million level that, it's going to just take a little bit more time than we have only in this year. Yes, government's buying, but they're going to have to buy for years in order to push that cycle so much higher. And so I do think we hit those numbers eventually. I don't think it happens in 2025. That's my honest take on Bitcoin to 200,000. That's exactly what I think. That's exactly what I think you and many people should be targeting. If you enjoyed the video, I'd appreciate a like and a subscribe. Let me know in the comments if you agree with this analysis and where you think Bitcoin can get this cycle.